Did you know that Bloomberg is giving us the opportunity to point out the political shenanigans that Citadel is going through right now? It is under the heat of the political spotlight, and I want to make sure that you guys have seen it. Right, we're going to cover just the most important pieces. It's going to be a little brief because this article is quite long, but this is written by Tom Maloney. This is from Bloomberg, and mainstream media doesn't always get it right? We do see bias, we do see some strings being pulled from some pockets, but when this kind of article comes out, you guys know that we had Mason on the show who worked for Ro Khanna, Congressman Ro Khanna, my congressman, that come on the show the day before, and we are putting all the bricks together to be able to put together these 3 to 6 bullet points that then we are going to circulate all throughout the different Congress people, and this is a great point to put right here, right? Look, Bloomberg is even saying how much Citadel is in the center of all this corruption, manipulation, and just general bad feels. And if you guys want good feels, the best way is to be able to smash that subscribe button early and often and that bell button. Only about 13% of you really do smash it, and I want to see that grow to 20. So I would really appreciate it, and onwards we go. For the world of finance, it was a must-watch TV. Yes, Pavel, I 100% agree with your super. It was a must-watch TVA U.S. Congress committee summoned an odd assortment of Wall Street characters to testify for a saga that captured so much attention it was discussed on Good Morning America. And if you guys remember that very first GME congressional hearing, we were streaming that live here. Wow, seriously, that seemed like a lifetime ago. How did amateur traders, billionaire hedge fund managers, social media posts, and an opaque market structure fuel a dizzying surge and sudden crash in the share video game retailer GameStop Corp? Right now, speaking of GameStop, let's switch that ticker. For Wall Street's savviest, one person in particular mattered most of all. It wasn't social media star Keith Gill, also known as Roaring Kitty or Deep Effing Value, despite his viral memes and legions of Reddit fans. It wasn't Gabe Plotkin, the hedge fund manager whose company lost billions after its short-selling positions were crushed. Right? You guys know that we have been talking about all of these people in detail on this channel. So if you guys are not sure who this person is, this person, we like him because he bought the stock and hasn't been manipulating a billion millionaire. This person we don't like because this person was the beginning of a manipulation to try to drive one stock into the ground, one stock that we have just been buying. And that is our fault, supposedly, that we just like the stock and are buying and holding it. And then Mr. Vlad Tenev, who turned off buying on Robinhood for millions of Americans and people around the world to be able to actually access the markets during the most crucial part of the gamma squeeze in January. But who is this article actually trying to talk about? Well, instead, it's Kenny G, the gray-haired 52-year-old hedge fund billionaire who would handle the glare. Over the past 19 years, with little public attention, Griffin has built his startup Citadel Securities into one of the world's most dominant trading enterprises. And you might remember when Austin Tobit, also known as user A Tobit, came on the show, that it's not just Citadel Securities anymore. It's the many multiple arms of Citadel pretending to be multiple different organizations, but not even doing a great job at it, right? Just a huge octopus over the financial market, and it's about to come to the limelight how crooked they are. The closely held firm has become a key part of the plumbing underlying the U.S. stock market and rapidly expanding into others. As recently as January, Goldman Sachs Group Inc. executives told colleagues at a internal trading division town hall that they viewed Griffin's firm as a bigger competitive threat than long-established European rivals, according to people who heard the remarks but weren't authorized to speak about them publicly. Let's go down a little bit more. Griffin is probably best known to the public for his $34 billion hedge fund. He also has political clout. Yeah, if you guys know that publicly financed and donated money is actually available as public records, you'll see that Citadel is basically on every single checkbook, right? They have essentially tossed their money in to almost every political organization except a couple, right? And I think Ro Khanna is representative of the couple of people that has not been bought by Citadel. If the meme stock frenzy is any indication, 2021 revenue may be a lot higher. Citadel Securities has grown from a small group built alongside Griffin's hedge fund to a global trading behemoth dominating not only US listed markets, but also international ones. I'm imagining that if they do get out of this alive, let's say that they pummel GameStop to the ground, they're not going to be able to survive the PR backlash. Seriously, you can take little pieces of money from like Office Space, right? Do a international hack and round up the money on every single transaction, and then make millions of dollars in a way that doesn't get the public limelight. But as a reminder, we are watching almost more than 5,000 of you are watching this right now. That this is here. And we know that they're the ones manipulating the market. If they win, it's going to be a Pyrrhic victory because it doesn't matter. They are already lost to us. They either bankrupt themselves or entirely become the villain in all of our stories for the rest of our natural lives. So let's see. Helped by regulations that curtailed banks after 2008 financial crisis, propelled by its state-of-the-art technology, and pushed forward by the ultra-ambitious Griffin, Citadel Securities isn't in the shadows anymore. But as the congressional hearing revealed, the spotlight brings its own peril as politicians and regulators examine how one company came to control so much of the market and what risks that exactly poses. Griffin and his firm will try to maintain the relative independence that fueled Citadel's growth. Okay, let's see if this is just background information that we can skip. Citadel Securities does this. Yes, they were losing hundreds of dollars, millions of dollars a week. And the news van parked outside Chicago headquarters expecting its imminent collapse. So this was, they have gone through hard times. I think is basically every single all hands meeting that says, hey, all hands. What should we actually talk about? Well, it seems like that we are about to go bankrupt again. I'm imagining this is something that they're pretty used to. So let's see. So Griffin started a full-service investment bank. Okay, this is just how Griffin built the Citadel, but let's actually focus on what they did wrong. It's nice to have the context, right? And we're going to include this in the description down below as well. Tiffany Terry Franks, let us be clear, right? I've tweeted out support for Matt. I've texted him my support and asked him if he wanted to clarify what happened. He has no clue what happened, and all of the Moon Platoon, throw some ducks in the chat right now. Thank you, Matt, for everything that you've done. And the Guerrilla Games, I'm speaking on Trey's behalf, and Moon Platoon, our hearts go out to you. This is injustice, and we're going to fight it. But the news does not stop because one of us is gone, right? And temporarily gone, might I add. If there is an actual active reason, I'm clearly not aware of it. And that means just like a stock that is bouncing and not actually correcting itself, this is going to be the resurgence of Matt like you've never seen it before. So this plan proved more fruitful. The post-crisis Dodd-Frank rules required banks trading desks to set aside more capital to cushion against potential losses, prohibited them from this yada yada more. More information about how they've weathered the storm beforehand. So Citadel had trouble even before the GME. There were shenanigans here. Okay, so Citadel, I think it's trying to say that Citadel had a part in the previous financial crisis as well. Although Citadel's growth has benefited from Dodd-Frank rules. Okay, this is just a history of Citadel. Okay, one sec. Those GameStop shares and options that Gil and other Reddit traders were buying on Robinhood, Citadel was handling almost half of those transactions. On January 27th, Citadel executed 7.4 billion shares on behalf of retail investors, Citadel said at a GameStop hearing, or more than the entire average daily volume of the entire US equities market in 2019. Citadel processes a lot of money. A quick rise. That degree of market dominance is drawing the attention of lawmakers and regulators. As technology becomes more important, only the biggest companies will be able to afford the huge investments needed, shrinking the competitive landscape. So this is trying to tell you a little bit more about how Citadel is poised. It's like an eagle. It's ready to prey on your favorite stocks. Like, yeah! In the past, the SEC didn't show much concern about market dominance. It seems like this is the same issue with Silicon Valley right now, so not going to say anything too much about that, but yeah, this is what monopolies are. It's the Amazoniation of listed market. There we go. Perfect. I'm glad Amazon got thrown in here. The attitude of regulators may be changing. Gary Gensler, the Biden administration's nominee to lead the SEC, raised the issue at a hearing in March to consider his nomination. Oh, so maybe that's why SEC is having so many closed-door meetings, because they're actually turning things around with this new Gary Gensler guy. We'll do more research about him specifically. In the wake of the financial crisis, many of the institutions that Citadel Securities competes with, including Goldman Sachs and Morgan Stanley, were designated systemically important under Dodd-Frank. Right? This basically meant too big to fail. Right? This meant that this bank is so integral to everything that we do that we basically cannot allow it to burst. In 2019, the Financial Stability Oversight Council changed how it analyzes financial companies that aren't banks. Now, each of those entities is designated systemically important only as a last resort. Good reason, too. After regulators have worked with the company to address potential risks, the process would probably take years and, in their opinion, probably go beyond a Biden first-term administration. Let's see. Olive Cheetoman, I don't have a mod called Raimundo Verde. So as a reminder, people with green names are not mods. People with blue names are mods. So the process would probably take years, and in my opinion, probably go beyond a Biden first-term administration, says Nathan Dean, an analyst at Bloomberg Intelligence. Some politicians say that revision could leave systemically important non-financial companies without needed oversight. Representative Jesus Garcia, Chuy Garcia, almost was the mayor of Chicago real quick for a hot second. There are families in finance to make as much money as they can with the least amount of accountability, disclosure, and regulation. But others say that Citadel's focus on trading liquid, centrally cleared products is likely to limit the systemic risk that company poses. There are a decent number of non-bank financial firms like Citadel Securities where if one of them had an issue, you could see some short-term disruption to liquidity, says Kevin McPartland, head of research in Greenwich Associates Market Structure and Technology Group. But that's very different to the idea of bank failure, which we would like to see a huge amount of capital wiped out overnight. It's essentially saying, hey, we as a government are not super great at keeping our money or maybe understanding oversight. How about we just let the people who love to make money, control how much money they make, and just become too big to fail. So this is one of the trickiest aspects of this story. Hey, what is going on here? Why exactly do we allow these banks to become systemically important, and now they are on the radar for being the most sneaky criminal people that we can imagine? Politicians have raised two other regulatory issues that could affect Citadel Securities. Elizabeth Warren and AOC from New York say the rebates that market makers such as Citadel pay to retail brokers, including Robinhood, for routing orders to them, known as payment for order flow, obscure the true cost of trading and give the brokers an incentive to push their customers to trade more often. There are so many payment for order flow videos on my channel, but just to make it crystal clear, here are those bullet points, by the way, from yesterday. If I needed to see them, I'll just look at them on the live stream. So I'm going to tell you a little bit more. There's the marker about payment for order flow. Really briefly, you make an order. You say, I want to buy GME. So GME, buy $1. Right? You go out and you send this out to your Robinhood app or your Webull app, actually. So both of these use payment for order flow. Through that broker, you are then sending that information at light speed over to a high frequency trading algorithm before you execute. And you know that it actually takes, once again, we understand clearing time, right? T plus 2 days to actually change money for the stock itself. So the milliseconds that it takes for you to execute that order, you are telling everyone your willingness to pay. right? Or if you're selling, you're telling everybody on earth your willingness to sell. Because, well, not everyone, because it costs money to have data. You're telling the high frequency trading algorithms. And these HFTs have the opportunity to essentially say, oh, they want to buy $1. Well, in that case, I want to buy it at slightly cheaper, right? It's basically putting a sign outside your door that says, my house is worth $1. Anybody want to buy it? And then everybody who is your neighbor gets to set a better price, either cheat you out of your offer, out of your position, or completely bet against you. Oh yeah, you're buying at $1. Well, I'll sell at like at an inopportune price for you 100 times, right? So this allows people to show their positions, and once again, data is power. So this amount of money goes to the brokers, which is how they are able to allow you to trade for free. This is right now just taxation without representation, right? Especially if we go through all of the allegations for contract for differencing, the CFD shenanigans. But right now, you're being taxed your data, and you're not able to actually make your voice heard in the market. That's payment for order flow. We've talked about that so many times. When big sharks like Citadel and Robinhood come out ahead, no matter what happens, and when the information they gather isn't disclosed, and when it's secret how that information is used, it's easier for these giants to skim off the top at the expense of small investors. Griffin said at the House hearing in February that with respect to order flow, we simply played the rules of the road. Payment for order flow has been approved by the SEC. It's a customary practice within the industry, blah, 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 right? He was reading off a teleprompter. We knew the congressman even asked, how many people are in the room with you, Keith Gill? And he's like, just me. How many people are in the room with you, Kenny G? And Ken Griffin, CEO of Citadel, said 5, right? He has 5 people feeding him answers, typing the answers out into a teleprompter, because as of right now, this is exactly what is the kind of difference in power play there are. A tax on financial transactions has won some support from Democrats. That's another option, right? An option that either that taxes and gets the government a little bit of this criminal. You know, is it criminal? Is it like immoral to pay for people's data? We have heard Alexis Goldstein just say, how about you just pass on, instead of taxing people, how about you just force the brokers to pass on the money to the people that they're stealing the data from? Have them sell their data voluntarily. And if they don't want to sell their data, have them opt out of payment for order flow and actually pay a commission. That's how trading used to be. Right? If people want their data sold, they can sell it for like a penny each time. Emily Jean sent you a DD with a direct link to your DM on Twitter. Okay, I will check that out in just a second. It doesn't help that Griffin, who owns questions about these regulatory issues, are raised at confirmation hearings for Biden administration nominees, including Gensler and Treasury Secretary Janet Yellen. At this point, we're about like partway into the article. Hold on, I just want to be able to see what the article says that he's done wrong. So let's look at this. On 75% of the securities is a poster child of inequality. Perfect, excellent. His campaign to fight off proposed taxes. Okay, so he's fought off taxes. Illinois tax campaign shows that he knows how to use his money to influence policymakers. Okay, that should already be a red flag. This guy really knows how to buy politicians. His political donations, we've already seen this, that he has grown them ridiculously last year. So it's 2.6 million in the 2012 election cycle to 66 million last year. He's just throwing money out there, right? Because he knows it's a good return on investment. ROIs in bribes, fantastic. So Citadel spokesman says Griffin's donations are personal and not connected to the company. Okay, big disclaimer there. Of course. In the past, Griffin's donations helped to give him blah, blah, blah. Oh, he elected Rahm Emanuel? Oh, no. That's why people were saying he was bought. Oh, no. Well, it's starting to seem pretty obvious now. He was very connected in DC circles as well. All right, he spoke to these people. You can make your own choices about those people. At the congressional hearing in February, Griffin received gentler treatment from, just more about how he buys people. This is another paragraph about how he buys people. Citadel, like other financial companies, also cultivated high-level ties with regulators. What I want to see is there anything about rehypothecation? Is there anything about them, about naked shorting? right? Is there anything about it's using deep in the money calls to cycle out FTDs? Like, that is the shenanigans that Citadel is actually up to. And if the mainstream media is already talking about it, then that's something that we can point to the Congress people that we're going to contact. So let's try to pull that out here. So they've also been talking to the SEC. Okay, Yellen, who is Bernanke's successor at the Fed, has collected almost $1 million from Citadel. Okay, this is good to know for future. Citadel's and Griffin's extraordinary role at GameStop's trading saga has attracted the ire of many amateur investors on Reddit and other sites. Yes, we have our ire is yours, Kenny G. Our ire is yours. Okay, so let me see what's going on here. Let me see. Citadel Securities positions executing orders instead of directly facing retail customers could work to its advantage. At the February hearing on social media, politicians focused on Robinhood. Yes, everybody was so angry at Robinhood instead. And that basically twisted the position so that Kenny G could get away scot-free. Everyone's like, Robinhood was the one. And Robinhood's like, please help me, Kenny G. And Ken's like, not this time, Vlad. This time you take the fall. It's one for you, one for me. So now it's their turn. So far, the GameStop episode has shed a little light into the poorly understood part of the financial world that Citadel Securities has come to dominate. And even the most well-connected firms can't avoid regulatory scrutiny when the public outcry grows too great. Just ask Goldman Sachs and Wells Fargo. The question remains whether Citadel, after benefiting from changes that policymakers and regulators have made in the recent years, will find itself in its sights. Bloomberg, let me just name a couple more things, right? Rehypothecation, using repurchase agreements and treasury bonds to basically put the entire nation, if not the world economy, in danger. Using naked shares to be able to cycle out of FTDs to be able to hurt a stock that you have no intention of actually repaying. You have the implication of dozens of FINRA violations that Citadel has already been responsible for. And finally, Kenny G looks like the kind of person that would do this. Just look at his face. That is 5 major allegations against Citadel that you have not yet covered. So Bloomberg, please step up your game, although I do appreciate them bringing this to the spotlight, and we will be able to point some of the parts of this article out with our bullet points to those congressmen. But once again, guys, if you guys are here for the news, fancy stuff, because these guys are here too, and they put their money where their mouth is by supporting the channel, going down to the join button next to the subscribe button and pressing that, or going down to Patreon and joining me there. For now, but not for forever, thank you for joining, and we'll see you in the money.